Today, the bulls completely hijacked the market. It broke the short bias on both the ES and the NQ. So here's how our daily extension levels caught the bottom and the pullback zones I'm tracking next. So starting off here with the S&P 500, we can see how price opened up right here, and then went down to the daily extension zone. And what the daily extension zone is we measured yesterday's high to low, and it's from the zero line to the 1.146. And so we do that for both sides of it. And typically we will see when it goes down to the bottom, the green part, we will see some support. It doesn't mean it's going to bounce off of it like it did today every single day. Or when it gets up to the red area, we're going to see some resistance. Now, sometimes it just straight cuts through it, but as you can see, even today, once it hit that area, there was some selling until it regrouped and kept on going up. And the main reason why was right over here. It was announced that there could be finally a peace agreement between the US and Iran, and so that created the market to move up higher today. But starting out for the S&P 500, what we had was a ABC extension going from yesterday's high right here, and we have it right there. And as you can see, price ticked down, hit right off the 1.146 extension level, and that was pretty much the low of the day. I mean, it went for 2 ticks lower than it, but that was the absolute low of the day right there. And so that's what my trading is based around, the pullbacks and the ABCD moves. I don't trade off the extension levels because those things can go on forever. They don't always reverse right when they hit it, of course not, but it's the pullbacks. That's why this channel is called First Pullback, because that's why I look to trade. But I want to show you how the market's set up with these ABCD moves all day, every single day in every single market. So that was the low of the day, and even within it, there were, from this high right here, there were plenty of ABC moves. There's one right there, there's another one right here, here's another one right here. Actually, it ticked off the 0.764, and how an official ABCD move is done is when the price breaks 1 tick above the high if you're going short, or the low if you're going long. So it did not. It hit the 764 and went down and hit that one, and then after that, I don't think there was any more on it. So the next thing we would have been looking for right here is taking the pullback. Unfortunately, this thing it got in at 12:45 a.m., so I'm obviously not trading. And what this arrow means right here is on my indicator suite of indicators I have up here, I'll just show you. There's a bunch of them right here. So I use the 89 for the fast EMA and the 610 for the slow EMA. I'll put them on here real quick so you can see them. So you can see right here, the red crossed over the blue. So when it does, I have an arrow that shows me, look, we can look for a short trade right there. I don't keep the EMAs on my chart because it just clutters it up, but I do keep the notifications on it. So what that means from there is it's also a valid trade, taking it from the last semaphore, which is right up here, to a retracement trade for first pullback. So with the 3.82, didn't hit it yet, so the exit's still the 0.236, and I'll explain the other lines as they hit them and things like that. Now, one thing I did do is normally the 61.8 is the primary Fibonacci retracement area, but I've noticed that it not all the time does go up and hit it, especially for some exits. So I moved it down to the 0.585 retracement level. So if it doesn't hit the 0.585, then no, it doesn't count, because normally if it came close to the 0.618, I would consider it good enough. But if it doesn't hit the 0.585, then it is not good enough, and it did not hit this one. So the exit's still down at the 0.27, because I moved it up from the 0.236. I've seen it sometimes where price gets real close to it but doesn't quite take it out right there. So anyways, goes down there, hit from the 38.2 to that one. So that one is set and done, and that was it right there. That was the only short setups for today, because as you can see when we hit the low of it right there, we just bounced off using an ABCD move. And so going here the other way, and what I do when I look for these trades is I want to trade with the trend. So right now the trend from starting today was going down because we're making lower lows, but then once the price broke the high of the day, which was when the market opened right here at 5 p.m. Central Time, then we switched to only looking for longs right there once it broke that green line right there from the previous high. So going up, what I would do for the pullbacks is, even though I wouldn't have taken it right here because this is going against the daily trend right there, we have the first pullback ABCD move, and then I look for the second pullback. I let the first one get established, and then after the first one gets established, I like looking for the second one. So we see we have a 0.236 right to 0.146, so that one is said and done. I don't get in at the 0.236. And then we had one go down here, and we'll go in a little bit more right here. See it hit 0.236, kept going lower, hit the 0.382, and then went right up here, hit the white line. So that one would have been said and done, even though it didn't even close below the 585 level, the 61 or the 61.8% level. Didn't even close one tick lower than it right there. Went up and hit the target. So then that one is done, and then we just keep on dragging it up. It's a easy process. Came down, hit the 38%. Hit the white line that goes right there. Now, if you can trade multiple contracts, a great way to do this is, unfortunately TradingView doesn't offer it, where you can get out at different levels, which is why I don't do it through TradingView for it, is you get in with a contract right here, or two contracts, and your first exit is right here at that line right there, and then you would move your second contract up just to one tick above where you got in for it. So if it comes back and take you out, at least it covers your commission for the trading cost, and then you leave the next one up here. That target would be the 1.146. That would be the optimal way to trade, but like I said, TradingView doesn't offer you getting out at different levels, so it's kind of bunk for it. But we keep on going up. So now the trade has moved to the uptrend side right here, because I got broken right there. Look this right down to the 0.236, and then finish right on hitting the target right there. So what we're looking for now is just another pullback right down here for it. There's another trade I got in over here. It's one trade I'm looking at. I'm not too confident in it right now, but how it works is you use the semaphores 2 in a row. They have to be going up from bottom to high, to the left, so up and to the left. And what you look for is when price hits the 0.168, that's the first entry, and the X is right down here. So this one wouldn't work right there. The next one we would have had right here would have been right here to right there. So as we can see, price hit the 1.618, did not hit the blue line, hit the next, this is in the 200 line, or yeah, the 200, so the X is still the 1.146, or very close down to it, did not come close to it. Now it's bouncing off the 2.447 line, so X we have is down by the 1.168. So according to this trade setup, it is still live, because I think how this works is, what's happening, you can see prices running up right here with not much of a pullback. It's all front runners. It's only going down around the 23.6 level. So it's a very strong trend up there, but people are going to start taking their profits up in this area somewhere, all the way up in here. And so when they start doing that, we will get a deeper pullback that will come back and take us out of the and get us in money when we short those trades. So typically a good way to do this is when price is hitting off the red, the daily extension levels over here. Plus we have one of these setups. This is typically a pretty good trade to get in right here. But this is still a live trade. I'm not 100% confident in this yet, so still just mess around with it. But my main trade setup are the ABCD pullback trades for it. So going into tomorrow, the bears have been totally decimated. Once this low got taken out, it took out all the ABCD moves they're looking for. So all we have looking for right now is ABCD moves going up higher. This is the main one right here. That one to that one, and then there will be some other short ones. There's one from this one right here as well, but we just use the main one right here right now that I'm looking for. So hopefully tomorrow we will get a pullback down to this area where we can start looking for some trades right in here. But the bears are decimated. The bulls are in control right now going into tomorrow. Now going into the NASDAQ was pretty much the same thing as the S&P 500. Didn't move up as quite as high as the S&P 500, but still the overall trend was the same. We have this ABCD move here going into yesterday. Went down here, hit it, and we also had a short confirmation down in here as well from the EMAs overlapping with that triangle. So we take from the last semaphore to right there, and then price come up, hit 38. Did not come down, hit the white line, take us out, hit the 585 level, and then came down, hit the white line, and that is it right there. So that setup was done. Then we were still looking at shorts right here, and so you still could have, because you still had this one over here with a new low right there. So until this level got broke, we weren't looking for any longs yet. And so as you can see right here, price came up, hit right off the 38% line right there, came down and took it out right there. And so then after that, it's pretty much just ABCD moves all up the rest of the day, because then soon after it, we see the high of the day get broken right there. So now we're switching over to the long sides. And here we have ABCD move. There is one right there, right down to the 585. I think he missed it by a tick, but it doesn't matter. Hit up there, hit the target. Keep on moving it up until it comes back, hit 23.6 to initiate it. Hits the target, starts rebounding, hits it right off the 23.6. So this is an extremely strong trend. When you're just seeing one candle, these are 5-minute candles, when you're just seeing this and it's not even going lower than the 20, not closing lower than the 23.6, we are an extremely strong trend. The bears are done, the bulls are in complete control of it right now, and it's just reloading right here. It's like the coils reloading, then boom, springing back up, and it just keeps on going up, up, and up. So what we're waiting for going into tomorrow, same thing for the SP 500 as we are in the NASDAQ. We are looking for a pullback into this area, but really we don't start looking for trades until at least the 38% level. But with the NASDAQ having the highest margins, but also the greatest profit potential, I'm not as aggressive as that as I am in the S&P 500. But so we are looking for a pullback just like an S&P 500, but since this low got taken out that was going through to yesterday, the bears are decimated, the bulls are in control. So we'll look to see if this is going to be a beginning of a new trend that we previously had been in the NASDAQ. You can see from right there to right there to right there. See, it broke out of the trend that was in right there and then has started up higher. So we'll see. Let me move this stuff out of the way. There's those new rules for some of those trades I was looking at, I was talking about. So we'll see what's going to happen tomorrow. Is this going to be the beginning of a new trend right there? Are we looking at more of like a double top right there and we get more sideways action? But anyways, right now the bears got completely knocked out. The bulls are in control, and we are looking for a pullback to continue the move up tomorrow. So the short bias is dead. We're strictly hunting the next shallow retracement. If you want to see this mechanical process play out day after day, hit that subscribe button. Remember, trade, plan, execute, and I'll see you in the next session.